Hello, hello, hello. Let's get everyone into the room. And I want to bring up this here, which is our Q&A for day one. So always interesting. I love these sessions more than anything else in terms of the sessions. So let me just get you as co-host, Shane. Awesome. Okay. So what are we going to do today? So if we just look at it, reminder to all of you, we are not providing financial advice, but we will be using our own experience, our mistakes, and everything else to try and answer people's questions in terms of this process. Now, what I wanted to kind of start with today was let's just kind of set the precedent for what the Q&A is all about. So the Q&A is a place where for the last 2 hours, or however long it's been, a little bit longer than 2 hours, we're going through the theory, but what we want to provide here is the ability to ask questions. Now, my real request is that the only silly question or the only stupid question is the one that's not asked. Okay, you'll be surprised how often someone thinks it's a stupid question. They ask the question. So many other people are like, wow, this is amazing. I would have asked the same question. They get huge value out of it. And then, you know, it sort of opens a kind of a cascade of questions in terms of that process. So I said to you that I recognize a lot of the faces that are here. And I said to you, I'd tell you the story of my own ESBI journey. But before I go there, what did you think of today's session? Does it make sense to you? And most importantly, if you've got any questions, just type them in the chat box, or if you just raise your hand, it'll show me that you literally just go down to share. No, it's not share, it's reactions. Anyway, there's a button called reactions, and you literally click on it, and you'll put your hand up, and allows you to ask a question. And yep, there we are. So Jane, I hope I'm pronouncing your name right. I'm not 100% sure. So if we can start by you telling me how to pronounce your name right. But let's start. Well done. And this is the moment where we all give you a huge round of applause for being the first to ask a question. So fantastic.
So yes, you are pronouncing it correct. It is Jane. Thank you for the session. I don't think I fully understand the private equity, how you showed that graph with the circles on and where it shows, you know, bonds, stocks, and then private equity. So
cool. Let's go back there. It's a great question because there's a fundamental understanding in this, and we will go through this in more detail on Wednesday and Thursday. But let's go to the slide now so that I can share it with you. So let me share my screen. So the one thing, if you haven't seen me before, or if you're new, when we do these kind of VIP sessions, I bounce around. Like there's no PowerPoint slide, if that makes sense. I basically go wherever people ask me questions. And if there's another slide I need to bring up, I'll find it, whatever. So this is the question that Jane is asking us about. It's this slide here. So let's start at the bottom with risk. So if you can see here, that basically on the left-hand side, it's low risk. And on the right-hand side, it's high risk. So what basically standard deviation risk means is that you basically, the more deviation, it basically means the more risk. So in simple terms, this means low risk on the left-hand side, and this means high risk. On this side, you've got return. So you can see the return here of 8%, and then the return of 10.5%. So it basically means low return, high return. So if you're in this top left corner, you're in low risk, high return. So like in any graph, like chart like this, you want to try and be in low return, high risk. Sorry, other way around. Sorry, low risk, high return. Does that make sense?
Yeah.
Okay. Now, the average financial planner, the typical portfolio that anyone has about 70% in stocks and about 30% in bonds. Okay, so that's just what the sort of typical person has. And interestingly enough, that category is in the highest risk, lowest return category. This is over a 25-year period. Okay? Whereas if you're in this category on the left-hand side here, And if you've got just 20% in private equity, you immediately are now in the lowest risk, highest return category. Now, we're going to be going through this in more detail tomorrow around what is private equity, how does one get into private equity, and that sort of thing. So don't worry about that too much for today. But what I'm just trying to show here is that we started off by me telling you the story of my father and how I then went and did the research. And at the age of 65, 99% of people are either going to be dead, broke, reliant on the government, or financially trapped. Like that's unfortunately, you can love me, you can hate me, but those are the stats.
True. Yeah.
And the reason being is back to this graph, because the majority of people are going along to their financial planner and they're being put into something like this. Whereas the wealthy, and I'm going to show you this on Wednesday, have at least 20%, if not more, in alternative assets, private equity, etc. And it shows you what a significant difference. So the purpose of why I'm trying to show you this graph on day one is just to show you that there's a problem. Okay, there's a problem, because what we're being told to do does not get a result. And if I'm wrong, then why statistically do so many people not get to where they want to get to by the age of 65? And the wealthy, the top 1%, are investing in something different, and they are getting what we want. And there's kind of like, well, hang on, we've got a problem. Like, if that makes sense. So remember that the principle of today was teaching people why diversification is so important. I will share with you a little gift, which I only did, and funny enough, Alan's online. And Alan was the reason that we created this. Because Alan asked a question 2 weeks ago, and he said, what about if we actually show people how to structure their portfolio? So again, I'm not giving financial advice, but when Alan asked the question, and now with the power of the family office that we work with and all the training that we've had through that, and then also with the power of AI, I took it and I asked a question. I said, well, hypothetically, spanning the last 50 years, so taking into account all of the historical data for the last 50 years across the different asset classes, taking into account modern portfolio theory and lifestyle investing. So again, don't get caught up in the big words here. All that I'm basically asking is, like, take the best knowledge out there, including the long-term trends. Take all the macroeconomic trends, including inflation, volatility, rising interest rates, technology, shifts, et cetera, and basically put it down into each asset class. So I'll share this with you in the VIP group today. But you basically got equities, you got private equity, you got crypto, you got commercial real estate, you got bonds, you got primary, secondary homes, you got gold, you got passion, etc. And then what it did is it basically built a modeled portfolio depending on how old you are. So if you're 40, like, what percentage should you be in? If you're 30, what percentage should you be in? If you're 40, 50, 60, right the way through to 80, what percentages should you be in? And then it basically has got the key macro informed principles. There's a chart that kind of shows you kind of where you're at. And by the way, I'm jumping the gun a little bit because we're going to go into this a lot more on Wednesday. And there's even graphs to kind of show you. Now, the reason I'm showing you all of this, Jane, is that what you're going to experience over the next couple of days is what the wealthiest are already doing when it comes to investing. And back to the Tony Robbins principle that we literally started with this morning was, if you want to be wealthy, copy what wealthy people are doing. And it's the same with the portfolio here. Like, what are the top 1% investing in? Why are they investing in it? And how can I do it? How can I copy them? Now, the best part about this was that if I did this 10 years ago, I would be a bit of a fraud. Okay, because why I say a fraud, because you'd be so frustrated with me, because I'd come along to you and I'd say, hey, Jane, you should be in private equity. You'd be like, cool, I want to be in private equity. And then you would go along to our family office's private equity division and say, cool, I want to participate. And I go, no problem. It's $250,000. And you'd be like, okay, but I know I need to be in, but I don't have $250,000. Or even if you got $250,000, you shouldn't probably put all 250 into one deal. And so it's like, okay, I can't participate. So 10 years ago, I didn't teach people this stuff. To be honest, I didn't even know a lot of it myself either. And I went out and bought houses and apartments. Okay, a little bit longer than 10 years ago now, maybe how long? It's been 11 years since I've been in commercial property. So let's say 15 years ago. And but now with technology, and back to my analogy of the driver, Jeeves, all of us now have access to these opportunities. And that's what I get so excited about, because now we can teach you. Now I can bring up graphs like this one here. Let me just share my screen again for you. Because now this becomes quite meaningful. Because now you don't have to just get stuck here. Just by the way, and I love to have conversations in these things. So I don't know, Jane, if you want to give your thoughts, anyone else can put it in the chat box. Why do you think the financial planners kind of tend to only put us in this? I mean, they know what the research is. Why do they do this?
Easy for them.
Yes, that's right. Easy for them. Anything else?
It gives that guaranteed return that they supposedly promise people. So
Yeah.
it's the...
So it does arguably give a safer return. That's correct as well. What about anyone else? Type it in the chat box if you've got an opinion as well. I'd love to know your opinion. It's really important. You should always get to the bottom of someone, why they do stuff. So it's safe for them. Fees. Yeah, so it's interesting. The two reasons I think most, well, actually three. Firstly, Jane, I agree with you. It's easy for them because there's a stock market. All you got to do is like take someone's money and put it in the stock market. Okay, and obviously bonds is the same thing. But the two reasons that, and this is a little bit of controversy from my side, the reason that I put you in private equity is because they haven't figured out how to make money out of it yet. Okay, so like there's no, until technology came along, there was no way to help everybody invest in private equity. Okay, so that's the, you know, and so they haven't figured out how to make money out of it, and they haven't figured out how to give you access to it. So they don't even tell you about it because there's no need to. Okay, like, and that's what I always find interesting with private equity, because I always ask people, how many of you invest in private equity? And generally, most people are like, no. In fact, honestly, most people don't even know what it is. And it's the reason being is that they're not having that conversation around the table with their financial advisor for all the reasons we've discussed. And I'm sure there's a few more in terms of that process. So yeah, these charts and graphs become incredibly important. Now, I know, Jane, you and I haven't had a long relationship, or the team haven't had a long relationship. But what's so interesting, do you know where I get all these graphs from? Like just, and you're going to notice a big pattern. Do you know where these come from?
Google?
No, so interesting enough. They come from our family office. So we work with a family office, and a family office manages the wealth of the wealthiest people in the world. And they manage about 65 families. They've got about just around $1 billion under management. And so you need kind of $10, $20 million plus to be able to kind of work with them. So I've known them since 2012, and I've never really been able to work with them because firstly, I didn't have enough money. And then secondly, when I had clients, I'm never really sure if people kind of qualified to be at the family office level. And then we joined, and we joined together as investors, and we started a mastermind in September, October of 2022. So it's been going about nearly 3 years. Well, it's 2.5 years. It'll be 3 years in October. And through that experience, they train us every month. They come in, they teach us what do we need to know in the markets, what's happening in the global markets, what are the different asset classes. And through that experience personally, these graphs came from them. So again, you're not going to see this generally if you go and sit with your financial advisor, because they're not going to show you, because there's no point in showing you because you don't have access to it. Whereas when you're at a family office level, they sit with you, they show you the research, and they say, listen, you should be in these different asset classes for these different reasons. Does it make sense?
Yeah.
It's like we've been investing naively, and now we finally get invited to the big boy table, the big lady table, you know? So yeah, I mean, it's a brilliant question, and hopefully it'll help you understand it a bit better. But I think for the purposes of today, the essence of what I'm trying to say to you is just showing you the trends and showing you how different it is from what the 99% are being told what to do and what the top 1% are being told what to do. And now over the next couple of days, I'm going to show you how to do it. Like we'll go more into that PDF that I showed you with all the allocations. We'll go more into that on Wednesday. But I just want to give you the peace of mind that you don't have to know it all by today. Like that's not the idea, you know.
Thank you.
Cool. Anything else I can help with?
No, I'll let somebody else ask their question. Thank you.
Thanks, Jan. Appreciate it a lot. Okay, Libby said a question here. It always seems that people have either a large sum ready to invest or significant monthly application. I so want to start, but I only have a little each month with maybe the odd larger sum now and then. Can I start like this? So Libby, we're going to do on Friday the plan, how to create a wealth plan and use the financial calculator. But on our platform, let me show you again. So one of the things with the VIP session is it's always about reinforcing as well. So if I go here, where's it gone now? There it is. So if you go here, today you saw me invest in private equity in London from $10. You saw me invest in Manhattan from $10. You saw me invest in Austin from $10. And you saw me invest in Phoenix from $10. So for Libby and for anyone else that's sort of, worried about this, you can literally get started from $10. And I tend to say to people, with all due respect, if you're honest with yourself, almost all of you would have spent $10 this weekend. Guaranteed. Like even buying your coffees or something, I don't know, like whatever. And so all of us can get started. Now, people turn to me and they go, but Scott, it's only $10, it's not going to make any difference. One of the greatest lessons I learned in my life was that you just got to get started. And then you start to learn by doing. And it's so exciting because
But we lost your audio, Scott. Your audio is gone.
Okay, can you hear me now?
Yep, all good.
Note to self, the microphone works for about 2.5 hours. Anyway, so back to kind of what I was saying. Where did you lose me, Shane? Can you just give me a quick heads up on where you lost me?
Can't remember. I'm multitasking at the moment.
No worries. Anyone else? Can you just tell me where you lost me there?
Good listening. What were you talking about? Then I'll remind you.
You were talking about like investing just little amounts of money.
Oh yeah, the
Maybe
$10.
Yeah.
Thanks, Kylie. Yeah, you spent $10 on the weekend, and you think $10 won't make a difference.
Okay. I'll backtrack. I just don't know exactly where you lost me, so I'll backtrack to that point. So, what I was trying to say is that people say to me, "Oh, $10 won't make a difference in my life," and I go, "Yeah, okay, cool." So the first time I learned the story was he was one of my best friends, but he became my business partner, and he actually came on a buy trip. So he was just buying South African houses, investing like a mom and pop retail investor. I got him to come on a buy trip to America, and he actually got to see what it was like to earn passive income in dollars. And it like completely blew his mind. He was like, wow, this is possible. Like I can become a global citizen. My son can go, to university in America. Like you start to dream big. By the way, his son went to university in America, and it all started by one trip to America. So that's what I mean by getting started. So, and what's happened with technology, even in those days, that was 2013, you needed $100,000 to get started. So it was still a massive barrier to entry for most people. Now you can get started from $10. And there's a video, which is an amazing video from Derek, who's one of our mastermind clients. He's a farmer. And it was so interesting because he's so excited in the video. It was just during one of our mastermind sessions. And if you want me to, I can play it for you now, just to show you the video. It's short, it's like a minute long. And I never actually knew this. Like, he was so excited. And then him and I invited him, and he came and spoke at one of our live workshops. And he was actually explaining to people that in that video, he had just made $6. Like, it was the first $6 that he had made passively. And people were like, who cares about $6? Like, seriously, like $6, what difference does it make? And he went on to share the story where he said, but the difference is that for 42 years, I've been a farmer, and I've been digging holes in the ground, planting seeds, and hoping that the weather, works for me and that it works, okay? And now suddenly, I finally learned how to make money while I sleep. And sure, it's only $6. But if you can make $6, you can make 60. And if you make 60, you can make 600. And if you make 600, you can make 6,000. So to Libby and to everyone else, my strong recommendation is get started. Try and remove the blockages and the barriers, because there is no reason not to get started. Anyone here could put together $50 odd, and you could invest in 4 or 5 different deals, and you could literally get started. And the other thing that's really cool is that I think with all the principles of diversification that we've been teaching today, you could not only diversify across multiple different deals, but you can also learn. So if you invest, there's a private equity deal right now, Jane, you in London, you can go and invest in it. And even if it was $10, you can start to learn, okay, what is private equity? How does this work? There's an industrial building in Phoenix. You can invest in that. Okay, what is industrial? How does commercial property work? etc. So the beauty is that not only can you get to diversify, but you can also get to learn about the different asset classes while doing it. So it's that whole learn while doing. So I hope that really kind of helps Libby and everyone else in terms of the question of getting started. Jacqueline, she was saying it's because it is regulated. So yes, it is regulated, but there's still a way to invest in private equity through a regulated means in terms of that process. Brom said, I want to be proactive now. So fantastic, Brom. Yep. So perfect. €100 a month. That's fantastic. Dawn said she invested yesterday. Well done, Dawn. Congratulations to you. I know there's been a number of blockages for you. So fantastic. That's brilliant. Derek says, just start. You'll see how it grows. 6 becomes 60, becomes 600 more. Yep, completely. That's full. Do you cover in 5 days the difference between regulated and unregulated investments, risk rewards? Yes, I'll go into that, Jacqueline, in terms of the space. I mean, we're in a regulated space. So everything that we do is within a regulated space. Obviously, there are unregulated investments, specifically things like crypto, that one can look at. But everything that we're talking about is in the regulated space in terms of that process. Right. Any other questions? Come on, this is that moment to engage and have some fun. I do want to share the story, and if you've heard it before, you can bounce. But for those of you who haven't heard the story, it was like this big epiphany moment that I had recently when I was invited to speak with Robert Kiyosaki, and I told my story of going through the E, the S, the B, and the I. And I'll finish off today with sharing that story, because I think it's a very valuable story for others in terms of that process. But before I go there, are there any other questions? Does it make sense? When you look at today, like some of the core concepts that we went through today was I showed you, I literally started off with the practical applications so that I could show you that you could do it. So you don't have to sit there going, oh, it sounds too good to be true, or I don't have the money, or I can't participate, because I literally showed you that you can do it. Then we went to why diversification. And again, I learned this. I don't know if I'll be honest with you, I don't know if everyone else knows how to do this. But when you're at varsity and you do a dissertation or a master's, you basically you do a hypothesis and you write an entire thesis on it, and then you either prove the hypothesis right or wrong. So when Shane and I were doing the research, Shane, my business partner, we were like, right, our hypothesis is, does diversification equal financial success, yes or no? Because some people say yes, some people say no. So it's like, right, let's go and do research on this. And we went out and we investigated some of the top companies in the world, some of the top people profiles in the world. And we said, right, what have they, what can they teach us? What do they say about diversification? And it was actually quite overwhelming how much research was out there around diversification and really just backing up that diversification equals financial success. I do want to repeat, I'm not saying, like mass put your money into mutual funds and it's going into hundreds or thousands of different things. Warren Buffett says concentrated. Ray Dalio says 15 quality assets. Like all of them are saying, like do it with focus, basically, in terms of that process, but still diversification in terms of that. Then I went through the 5 myths and like, what are the myths that are holding you back? Now, you might have other myths, but those are sort of 5 of the top myths that people, and things like, it's only for the wealthy, it's not possible, I can't do it, all of that. And I basically shared with you how you can do it, how you can get access to the right information, how you can get access to the right partners. I also shared with you something that we've evolved, and it's quite new because it's only come about this year, which is what we call our paid framework, where you get access to the right partners. You get access to the deals, you get the right information, and you get diversification. And that's our paid framework. And by using that paid framework, you can aim to get $1,000 of passive income or more as soon as possible. And then finally today, what I did was, after I took you through the 5 myths, we had the interview with Michael Honeysett, where I do try and do this very consciously on purpose to introduce real people and real stories, because it's so powerful to hear from other people. You're going to be meeting different people all through the week because it's so valuable to hear their lessons. And what I'm trying to achieve while we're doing that is for you to go, hang on, but they like me. I can do this as well. Because I fundamentally want you to not just get the theory, but to be able to actually take practical steps. And then the last thing that I think is really relevant that we did today, which is brand new, or the last 2 things, to be honest. The first is that you've all got access to this workbook. So each and every one of you has this workbook. So you can almost go back through it today and go through day 1. It's only a couple of pages. It's like 3 or 4 pages per day. And you can literally go back through the main points. You can reinforce it for yourself in terms of these main points. And you've got the action items, etc., etc. By the way, these countries and currencies, there's a reason I got them on day 1. I want you to try and guess. Tomorrow I'm going to show you where what now. But today it's just to have a bit of a guess. Where would you, if you could, what do you think? And so yeah, I shared this with you, which is brand new. No one's ever seen this before. I know that because we created it last week. And so it's only for the VIP members. And then the other thing that I'm super excited about is this, which is the Wealth University. And all of you have got access to it. So, my strong recommendation is you go to the community, you write in what your top 3 takeaways were. You can see someone's done it already. Simon's done it. So well done to Simon. And you can go and see, what different people's key takeaways are. But what's really cool here is that we've created, so you can go to start here, and I've gone into the psychology. So you can see here, you've got a couple of things. You've got get started, and then you've literally got 7 lessons. So this is the psychology stuff, which is really important. And then Alex, my partner, has taken you through 5 short videos, if you're not already on the platform, of how you can basically get started and start investing on the platform, etc. So it's pretty cool in terms of it. So lots of resources for you to be able to get access to and to be able to get going. So ideally, everything that we've taught you today, or everything we've shared, we never walk away, and I'm going to try and do this the whole week. We never teach you something, but then don't show you where you can do it. Is that fair? I don't see the point of giving you the theory. This is not a theory challenge. This is a practical challenge in terms of that process. Okay, Jacqueline said, was having challenges end of last week to set up a dollar account to invest on the platform. Will that be made clear when I go through the homework video? So Jacqueline, let's go here and let me show you exactly where that would be. So you go to Classroom and you literally go International Money Movement. And it literally teaches you how to do it, move your money, why lemon way, what you'll learn in the lesson, etc. So yeah, it's hopefully all here. My partner Alex has done a huge amount of work on this. I had to try and make it as simple and easy as possible for you. And obviously there's a video you can watch. Okay. Yep, so perfect, Jacqueline. If you're in the UK, no problem. It's easy from the UK. I've got a bank account with Lloyd's, and I transfer my money from Lloyd's directly Lemway. It's really easy. So any other questions that I can help with today in terms of the process? Anything that I have missed out? I've tried to do a bit of a recap for you. I do want to share that story of the E, the S, the B, and the I, but I just want to find out if there are any other questions from anyone else. I know it's a lot of information. I know we're pretty much sitting on the 3-hour mark. But what happens in these VIP sessions is I don't go. I can stay for another 2 hours if you want to. I want to make sure that each day we get very clear. If there's any blockages, any questions, we run through them. And I want to make sure that each day you can make measurable progress so that nothing's blocking you. We will always go through a synopsis so that you can kind of understand what we went through and why we went through it. If there's anything that's, I haven't answered, then let me know. And I can go through it for you. No, I'm not seeing any hands. I'm not seeing any questions. I always joke with people when I do that, I've either confused the shit out of you or bored you to death. So I hope it's neither of those two. Maybe it's the third one that I actually have answered some of the questions. But please, I want to reinforce, there's no such thing as a silly question. So even worst case, if you want to, you can send it to me in a chat, not to the whole group, just to me. And I can answer the question anyway. So please make sure you ask whatever you want in terms of that process. Okay, so let's go to this here. And I actually built this literally on Friday. So this here are the different lessons that I took the people through. And lesson number, where's it gone now? Was going through the stages. Where's it gone now? Oh, here it was. Okay, so I told you already, I had the pictures up of Robert Kiyosaki. And what this forced me to do was to have this experience where I basically came and had to kind of relive my own journey. And it was so interesting because my mom, I'm not going to do it in detail, but just very quickly, my mom and dad gave me this book, Rich Dad, Poor Dad, when it was 2001. So you can see the note that they sent me here on my birthday. We hope you make your fortune, but more importantly, we hope you have good health, many friends, lots of love and happiness. And where's that book gone now? That was actually written here on the inside cover of this book. So the reason being that they found this book and gave me this book was I was so desperately unhappy. I'd gone to London. I had cum laude my degree. So my honors degree, I'd cum laude it. But I was very much in the E quadrant. I was an employee. And my very first job in London, I was a laborer. You can literally see I found my job card. I was earning £5 an hour and I was a laborer on a construction site. And we used to pour concrete. Now, you've all heard of my story with my dad, so I'm not going to repeat it. And you've all heard the story that I wanted to do it differently. I went and did property and did all these different properties, etc. But at the age of 25, I actually went to my boss and I had this opportunity. Most people haven't heard this part of the story. And I went to my boss and I had an opportunity to do a property development in Ireland. And my company I worked for was an Irish property development company, construction, concrete, and property development. And I said, I want to do this development in Ireland and I want you guys to do it with me. And he said, no, you can't do it. I was like, why not? He said, no, because your job's to be on site and pour concrete. I was like, right, I'm done. So I was 25 years old when I started my first business. And as I said to you, we helped thousands of people buy houses and apartments in sort of America, England, Australia, South Africa. And the business grew quite big. And, we basically went from international property solutions to Wealth Migrate. And I've told you already, about, going over and meeting with Dolph DeRoos and investing in myself and all the problems that investors have. And again, I'm not going to repeat this today because we've already been through it, but the challenges that the 99% have, the life lessons I had when I was in Wimbledon, and how I learned so much about partnership and the benefits of partnership and everything that I kind of took you through. And then sort of the results. So since we did our first commercial property in 2014, the results that we had. So we were very much in the B quadrant, but it was time to move to the I quadrant. And one of the reasons that I went to Necker Island in 2015 was I wanted to learn from Richard Branson and these other incredible entrepreneurs as to how they invest. And, that was where the whole principle of Wealth Hackers was born. Because, again, I'm repeating this, but today I said this to you, we were told to do a life hack, and we were like, well, actually in wealth, that's exactly what we do. But one of the things I enjoy most was that Richard Branson reminded me of this quote, and it's the quote that we've used to build all our businesses. You can have anything you want in life if you help enough other people get what they want. And so what's so amazing is that we made it our mission to kind of go out there and do it. And, we've helped so many different people in so many different walks of life. But it also allowed me to run a journey where, because I was investing with other people and using things like smart partnerships and the platform and everything that we're going to share with you over the next couple of days, it allowed me to invest on 5 continents, 5 currencies, 40 assets, 15 partners, and across time. And this afforded us an amazing lifestyle. Like, I live in Knysna. The views are spectacular. I mean, this is off the back of our boat. This is off the front of the boat. This is the beach my son and I go to. That's the view from my house, and that's us in the jacuzzi. And we've also been able to travel, whether it was the Rugby World Cup, going to Disney World, Southeast Asia, the Great Wall of China, et cetera, et cetera, et cetera. But where this all kind of literally came home to me was in February this year, because this building here is in North Acton in London. It's the tallest residential building in London, and it's got the biggest penthouse in Europe. And that day, I literally went, it was a Friday. It was, believe it or not, it was literally nearly my birthday. So my birthday was 2 days later. So 24 years after my parents gave me that book. I went down to the tube station because I was meeting a whole bunch of investors. And I came across this construction site over the road with O'Shea's. Now, you can't quite see it through my hair here, but the company was called O'Shea's, and they were pouring concrete. Nothing had changed. And what I realized was that if I hadn't had the guts when I read this book to move out of the E quadrant, I would probably 24 years later still be on site. I'd probably be the site manager or the project manager, whatever, but I'd still be pouring concrete. Can we all agree that? And that day, we weren't pouring concrete. In fact, we were in the building that company had built. So O'Shea's actually built this building, and we were there with the developer, and we were literally negotiating with the developer to invest in that building, like to own a piece of that building with the developer, which is what we call smart partnerships. And there were about 20 of us, 20 kind of shareholders, sorry, not shareholders, 20 investors who were there negotiating this deal. And that's why I always say to people, when you look at this diagram with the E, the S, the B, and the I realized that, we're all asking this question of how do we get there? How do we become an investor? And it made me realize that I'd gone full circle through the quadrant. And it was pretty cool, actually, to kind of see that and the difference if I'd been just kind of presenting or just kept doing what I was doing and pouring concrete and everything else, and so many people stay in the E quadrant. And it reminds me of something. And Derek, if you're here, you sent this to me, but I've actually evolved it a little bit. So how cool is this? So Derek sent me something today that I liked, but I wanted to adapt it. And so how cool is this? Because it kind of ties in. And it says, it's crazy how people think 2 to 5 years is a long time to get momentum towards being wealthy, but don't feel like 40 years at a job is a long time to stay broke. Pretty cool, eh? So anyway, Derek literally sent me something today. So Derek sent me something that said like getting rich in 2 to 5 years. And I like the concept, but I don't necessarily agree with it because I don't believe that you can get rich in 2 to 5 years. I really don't. Now, don't get me wrong. You can take your money and you can put it on crypto, or you can go to the casino on red or black, and you can take all your money. And if you go red or black and you get it on the right number, you'll double your money. I understand that. But if you get it on the wrong color or the wrong number, like, you lose all your money. Like, to me, that's not investing. Like, that's gambling. And therefore, I don't like it when people say things like you can get rich in 2 to 5 years, because when it comes to investing, I actually don't think it's possible. I truly don't. Like, I used my uncle's story where it took him 23 years. 23 years. There's a big difference between 23 years and 2 years. But I do believe you can get significant momentum in kind of, 1, 2, 5 years, whatever. And yeah, when Derek sent that to me, I loved it. And I was like, wow, that's such a valuable lesson. And if I hadn't have moved out of that E quadrant, like 24 years later, I'd probably still be pouring concrete. And there are specific principles to being an investor. And hopefully I've shared some of them with you today, and I'll share a lot more over the next 4 days. But I think it's really important just to understand that. Jacqueline, you said, during the presentation, you mentioned about being bought hundreds of properties. Just a bit muddled about if Wealth Migrate members are taking part in the purchases of the properties, or has the property already been purchased, get an ROI whilst the property is in use. Did you sell properties once the timeline for the investment had expired? Okay, so Jacqueline, there's a couple of questions there, so let me kind of answer them all. So remember when I started out, I helped thousands of people buy houses or apartments. So that was through the first company I started called International Property Solutions, where we only help people buy houses and apartments. And then in 2013, we actually started Wealth Migrate, which would allow people to invest like the top 1% in commercial property, etc. And so we haven't invested in thousands of properties since then, commercial properties. But every deal that I've talked about since 2014 has been on the Wealth Migrate platform. I've invested in it, but also the other Wealth Migrate investors have been able to invest in it. Now, back to your question, you only earn a return on investment once we buy the asset. So once we own the asset, and there's always a timeline as to when we get paid. And then once we own the asset, like imagine if I own this property here and it pays a rent, then when the rent's paid, that's how the returns are paid to all the individual investors. So think of it like commercial property. Sometimes it's paid monthly, sometimes it's paid quarterly, sometimes it's paid every 6 months. But the point is, whenever it's paid, then it gets paid into the investors' wallets. And then when you sell the property, so generally you'll see there that there's a time frame on the deals. So if I just go back to the platform here, you'll see that there's a time frame. And so if I go back to the marketplace here, you'll see there that this one's a 4-year investment, this one's a 7-year investment, 7 years, this one's 5 years, this one's 3 years, this one's 5 years. So remember, we're diversifying across time, and each one of these, there's a target exit. So the idea would be to buy the building, hold the building, and then sell the building. And when you sell the building, that's when you also get your capital growth. So you get your income through the whole time you own the building. And then when you sell, that's when you get your capital growth. So yeah, hopefully that answers your question, Jacqueline, in terms of your question. Cool.
Scott?
Yes.
You mentioned a very important thing there. You say you can't get wealthy or with your investment, under 4 to 5 years or whatever. Yeah, I agree with you. So what happens to people that are 75? Got this money invested. I want to go and buy a property on Manhattan or this, or change investment. And what I understand is, well, you can't do it because it'll take you 4 to 5 years. So 75, you're going to be 80. Well, that brings in another, obviously, problem. You'll be half senile then or whatever. So what does one do then? What are you saying? When you get to like 75, have you got to have an important thing, a separate structured portfolio? stay away from property? What do you actually do? Because I don't argue with you, it's right. You get to 75, you've got another good, say, 5 years, 70, 80, whatever, the next thing you'll pass on with. So what do you do with your portfolio, the money you've made, when you get to 75, whatever? How do you handle your affairs? I think that's the question.
Yeah. So I think, Alan, I think the point being is that all I was trying to say here was what Derek originally sent me was this, that said, it's crazy how people think 2 to 5 years in business is a long time to get rich. Okay. Yeah. And so I was just talking about the rich part, and sort of saying that I don't think one can get rich, even in business. It's takes time to build a business, etc. In terms of it happening quickly. So that's all I was really trying to talk about. I think back to your question, and again, I mean, you're part of the mastermind. You've got access to the family office in terms of proper portfolio planning. You'll see here that document that we did about 2 weeks ago or whatever. This one here. So it actually breaks down like someone who's in there. So let me share my screen with you here quickly. So someone who's in their kind of 70s, like it breaks down what one can do between equities, etc. So it's kind of getting a more balanced portfolio. And then it's got a rationale here: maximize stable cash flow and hedge against longevity inflation risk. Bonds dominate for capital protection. Exposure to gold increases as a defensive asset. Legacy estate planning starts influencing home and alternative locations. And then obviously with 80s, it's got a slightly different kind of focus in terms of that process.
So do you agree that, let's go back to the 80, so you're 75, do you agree that between 75 and you're going onto the 80 thing? How do you do, I think the question is, how do you structure? What do you do? Who do you go to? What do you do? Because it's a different age, and it's a valid point what you're saying. So like that.
Yeah. So I think, Alan, for me, the two things that are important here. The one is that what I tried to do with this document, when you asked me this question, was to go, let's just try and create a guideline for everyone. So no matter who you are, people can go look at the guideline, they can take the age, and they can kind of a guideline. Obviously, better than that is if you can sit with the family office and they can do it in your personal way. So at our family office level, let me try to find the slide here quickly for everyone.
I think an important thing is, which when you go to investing and investing people, they may ask you your age, but no one brings up the important thing that you have brought up, saying, look, Alan Ross, you're 75, brother. You just stay in those investments, yes, that are doing ABCD. Don't go and bugger around and go and try and do this and this. And so you don't get that. I picked that up through being on your school. So my question is, if I say go to Investec, Timbuktu, I say, I'm 75, brother. What are you going to do about me? I change. I can't move. That's going to take 3 or 4 years to. But what I'm trying to say is, on my life's journey, not that I looked after myself in investment, it's never come up. It's come up only through you, and I think you're correct. Yeah. I may say, I don't know if you understand what I'm trying to say.
No, I think I do, Alan. I mean, you know that, I feel very strongly about this, which is where it doesn't come up because these are uncomfortable conversations. These are the elephants in the room, and I feel very passionately, along with my partners, that we need to teach people what the top 1% are doing. And as an example, at a mastermind level, when someone sits down with our family office, they basically understand it, so they'll sit down and say, Alan, tell us about your individual circumstances. And then they do the Enneagram of Wealth, which is the whole profiling system of who you are exactly as an investor. And then they build you an entire model. And these are 3 pieces of a table. They call it portfolio construction. So I mean, you get your own personalized plan, like, right, this is where you are, this is where you want to be. How do you retire? What should your portfolio be? Now, that's a bespoke solution. That's only available to the people that join the mastermind, in terms of the process. What I tried to do with that document is say, like, right, based on all this learning and knowledge, like, let's create a framework. It's not 100% perfect. It never can be. It can only be accurate if you actually take people's individual circumstances into account. But at least it gives a better guideline from what people generally have, which is nothing. Like, so yeah.
But anyway, it's a very important question for people. I think when you get to upper 75 now, or you take in whatever 70s, none of the investing people, houses, or whatever you want to call them, sit down and say, Alan, you're 75, brother. This is what you need to do. This is what you've got to be careful at. Don't go and invest in, yes, go in crypto, put something onto it. So that you lose it, it doesn't. And that's what I'm trying to share with you. Again, what I've learned, no one does it. So I bring it up now. I don't want to bore you. I went to a lunch on Friday, and it was an investing house. I'll share with you, but I cannot tell you how bad it was. Just clueless, actually. And, they've got people there in investment and their money. It's a hell of a thing. Anyway, my question is 75. What do I do, brother? I'm 80. Be fucked. Excuse my language. But somebody's got to tell you, and you've got to be honest and realistic. And I haven't done it. That's the sad part. I haven't done it.
Look, I think the best thing for you, Alan, and I know you and I are chatting about this later, but the best thing, in my opinion, and everyone must follow their own intuition eventually, but my opinion is you've got the right people in your corner now, and they can truly help you set that up. You know what I mean? So and do it right. And I think that is the difference. And what I like also about a family office is that they really, it's a bespoke thing. So you're not being put in a box. Again, back to the financial industry, we're all put in a box because that's how you can manage mass people, is put them in boxes. Whereas if it's bespoke and it's personalized for you, then that really does kind of help you in terms of that process. So I think it's really important to kind of do the work that they're doing with you, set up the portfolios, and then implement what they are taking you through. And obviously, what I'm trying to do with these sessions is democratize what at the mastermind level we learn in a one-to-one way with the family office members, but try and democratize it for everyone else. Which I think, Jane, was the question you asked right up front, trying to explain where that information came from, how do we get those, reports, etc., in terms of that process. Derek said, feeling that you've run out of time, that's disempowering. I do like what Derek said earlier in the chat box here. He said, just being in control of your life is truly liberating. And I think that's something that's so important here, because no matter what stage of life you're in, whether you're, Kai's been on this where he was 13, through to people that have been in their 80s, the really important thing here is to firstly understand and get the knowledge, and then secondly, to be able to take action so that you can actually start to get the results. And what I love about it, I know Libby had to leave, but like if you're starting with 100 euros a month, you're going to start feeling empowered. You're going to start getting the results. And when you start getting those results and feeling empowered, that's when things can truly change in terms of that process. Thanks, Kevin. Appreciate it in terms of what you want. Jan said, how does one make these investments as tax-friendly as possible? So Jan, I don't, it's very difficult for me to give tax advice. Obviously, everyone's got different tax situations, and also we've got members in 178 countries. But what I will say to you is that we do go through the process. So let me just, I just need to, on day 4, so day 4, we're actually going to go through the structure, and I'm going to show you how it works. I'm going to give you a sneak preview now because you guys are part of the VIP. Let me go down to the slide here quickly. There it is. So this is how we do it basically. So you've got the investor bank account, and then you got the investor wallets. Every investor has their own wallet. Then you go on the platform like Wealth Migrate, and basically you got a deal. Let's just say for now the Manhattan deal, and then we basically aggregate. So what that means is all the investors come together to invest, and then it goes through a tax efficient vehicle. Okay, so then we own the building. It's the deal ownership. And then we basically, when we get a return, so when the building pays out an income, then it goes back in the deal wallet. And then from the deal wallet, it gets distributed into every single investor's wallet. And then if the investor wants to reinvest, they can. Or if they want to take the money out and, you know, go to Disney World, they can do that. It's their money. They're completely in control. So Jan, Jan or Jan, I'm not 100% sure. But anyway, to answer your question, it is a tax efficient vehicle, and it is helping you set it up in a tax efficient way as legally as possible. But ultimately, at the end of the day, one would need to get their own financial tax advice in terms of the returns. As an example, as a South African, you are taxed on your worldwide income. So your net income would then be necessarily taxed unless you set it up through a company or a trust. So again, at a mastermind level, they sit down with every person, they go through their situation, they look at their tax, they look at their structuring, and they set them up in an efficient way. But I hope that helps. Jan, I'm not sure. But anyway, hopefully I've helped you in terms of that process. Ram, how do I get access to the family office? If you join the mastermind, so there's a qualification process to join the mastermind, but on the assumption that you join the mastermind, everyone that joins the mastermind gets access to the family office. Dawn says it's never too late. So again, I remind you of what I said earlier today. The best time to plant a tree was 20 years ago. The next best time is today. It's a Japanese proverb that I really enjoy. Okay, any other questions? I think that's probably enough information for one day. Have I smoked your brains enough? Afrikaans. Okay, Jan. I'm sure I'm getting it right for you then, Jan. I am English. I'm from Durban with a mom from Zim and a dad, a mom from Kenya and a dad from Zim. So my Afrikaans is, Durban Afrikaans. But anyway, and Brom, I'll take you through the details on Wednesday and Thursday about the mastermind and show you how you can be involved. Jacqueline, thank you. I'm glad it's been fun. Jane, great. Yeah, so I'll leave you with a closing thought. Remember that you've got some of the homework things. Just go and do them. You've all got access to the workbook. I'd love your feedback on the workbook. It's brand new. We just built it. And, work through the different things in the workbook. And most importantly, today we've learned the principles of diversification. We learned what the top 1% are doing and why they're doing it. And now over the next 4 days, we're going to literally teach you what to do, how to do it, who to do it with, and then finally, you're going to walk away with a plan. So I look forward to seeing you live nice and early tomorrow morning, depending on what time zone you're in, 9 a.m. SAST. And tomorrow we go into what are the top countries to invest in, what are the top currencies, what are the top 15 assets. It's really important to now start getting into the practice of how to actually do this. So if there are no more questions, I am going to say cheers to everyone. Thank you all for being so engaging and participating. Shane also made a comment to someone. If you've got any questions, you can also just put them in the VIP group. So we've got the WhatsApp VIP group. If you write anything in there, because you might think of it this afternoon, like while you're going through the workbook or whatever, just write it in there and then I'll answer it when we come to this VIP session. Is that cool? Okay, everyone. Have a wonderful day and we'll see you tomorrow. Cheers, cheers.